All right, good morning. Thursday morning, we had news at 8:30 and we just had open. We have some equal lows right here. We are delivering from a 15-minute and a 5-minute from yesterday. There is reason to believe that price could push higher, but if we can see a significant push lower, that would be my setup for a market structure shift, which is right here. We did tap it and went through it, but I'm looking for a breaker, and I would like this to be my breaker. I want to see this potentially be the breaker right now, but I need to wait and see how price sets up, how structure sets up. So that's what we're doing here this morning. We got some equal lows right here. There we go. All right, so this is what I was looking for. This is what I wanted to see. So I like seeing us move to lower prices. We need some displacement here before I'm willing to look at it coming back up to hit this level right here, which would be the market structure shift and the breaker. Yeah, see, the thing I don't like about what I'm looking at right here is this is the 2-minute. Look how wicky this is. It just, anything that's wiki is just, it's very subjective, and it's very subjective as far as where you place your stops. And you get this right here. I mean, you just get a strong push higher, and it could just turn around. So it's really wiki. I want price to settle down. Let's see what happens here. We're in this 5-minute fair value gap right here. Yes, it's showing up as a 1-minute, but it's also a 5-minute. And it may not give us an entry. Right now I'm looking for a breaker. I want it to come back up into here. I could do a tight stop. It's very bearish right here. And I could have used this as my entry, but that's just not, I'm not a gunslinger like that. I'm not going to just grab it on the wick. Especially when we're right at open. It's really wicky. That's the midnight open right there. We just hit that dashed line. That's the midnight open. We have our 50% retracement right here. Oh, let me put it on here. So if price does want to go higher, all it needs to really do is tag this 50% retracement, or the 50% of this leg from low to high. It's very common to see price come back down to the 50% level and then push higher. If we inverse this, I would consider taking this. That would be, reason for that is we ran these lows here. We came down, we're not grabbing the liquidity. If we close below this, we're probably going to be more bearish. And we have some room to run. 5 seconds. Okay, it doesn't close yet. We got 24 seconds before this 5-minute closes right here. $12 seconds. It's just that right there, which we're probably going to close, meaning we're probably going to run for these lows here. Only thing I don't like about it is you got a big stop loss. So if we come up into here before we hit these lows, I'll consider taking it. But if we just push straight lower to it, I'm not interested in it. I'm looking at, this is the 5-minute right now. Yeah, this is looking bearish. We grab liquidity. So we did hit. Sorry about this, guys, but I gotta take a call right now. Sorry about that, guys. I also have a real estate business that I run. So I have to handle some clients that are closing today. All right, what do we got? So we hit these lows. So that 5 minute did work out. That 5 minute did work out, targeting right here. That would have been nice. Honestly, I wanted it to come back up into the 5 minute before I took it, because risk would have been, my risk to reward would have been 12 handles. So ideally, or that my risk would have been almost 20 handles, and I didn't want to mess with that. So honestly, what I would wanted to happen is for it to come up right into here, tag it, so it reduces my potential risk, which right there would have been 10 handles. So that would have been acceptable for me to take. So that's the main reason why I didn't take it. Large stop loss, and I just wasn't willing to take that risk. All right. You look at a higher time frame, it's looking like we're entering a market maker sell model. Let's just pull that up. I want to show you guys. Right here. So this is potential market maker sell model. We have our consolidation, we have our accumulation, second stage accumulation, then we have our smart money reversal, which would be right here. At some point, we're going to get our low risk entry. Once we get our low risk entry, then we're looking at distribution stage 1 and distribution stage 2. Could this all happen today? It is very unlikely. This is a multi-day setup, so I look at the market in this type of structure, from low to high, back down, and that's a market maker sell model. So since we're sitting up here, I'm really looking for a breaker, a bearish breaker to the downside that would support that idea. Could we not get it? Yeah, we may not get it. Here, if I look on the 15 minute, we got a high, low, higher high. And so this would be the potential breaker on a slightly lower time frame. And then we go to the 5 minute. The 5 minute one that I like right now is this market structure shift or a breaker right here. We may not have enough energy to get all the way back up there, so we got to really evaluate where our potential entry could be. Now, why this one and not this one? Well, this one created the high. This one created a high, but then it retraced just above a fair value gap and then went higher. This could be considered a market structure shift. This could be considered on the 5 minute. The reason I also like this one is it's also within a fair value gap right here. this fair value gap makes this more valid, in my opinion, for price to come up and touch. It's probably unlikely price is going to reach back up into here, because this from here to here is a balanced price range now. That's a balanced price range according to ICT. So price does not have to come all the way back up here. We could see it come back up here and touch here, which is a little bit below the consequent encroachment of this 5-minute fair value gap. So these are all the things that I'm looking at to try to determine where is my safest entry to take a play. Now, honestly, I'm kicking myself in the foot or in the butt. I wish I would have been a little more risky in taking this entry. This played out beautifully. We saw the momentum. I was concerned about my risk. I had a loss yesterday, so I want to take extra precautions today. I've downsized since I took a loss yesterday. I am, instead of doing 1 mini, I'm doing 5 micros. And so that is how I reduce my risk until I make back my losses, or at least 50% of the losses. So we see the 5-minute retracing or moving back up right here. So that is something to keep an eye on. I also like this right here. And this is a signature and a market maker sell model. It could reach up into here, but this is nice. There's a fair value gap right here that we could touch, and then we could continue lower. See how we didn't grab these lows? This is the target. This is the target right here. Sell side. We came up, came back down. We didn't touch it. See how we bounce from there? So now we need to find out how high does it want to retrace. Now, you pull a Fibonacci retracement tool, 50% is really high. It's up here. And we're just hitting that breaker right now. Let's keep an eye on this. If we close on the 1 minute above this fair value gap, that actually could be an inversion play to reach towards this 50% retracement. And I'm trying to identify which one do I like better. Now, before I take an entry on this, if I'm going to do it, I want to see a swing high formed. It's less risk, but it's also, you could potentially miss the move. Many times you just want to take it right on the stab into the level, but I don't want to do that. This is really hard to want to do that, because I've seen this just push right through. It could just push right through. If we redeliver off that and we close below this, that would be an inversion. From this candle's low to that candle's high is a fair value, or this candle's high to that candle's low is a fair value gap. If we close below that and also redelivering from this breaker, that tells me we're running lower. And I would take that on there. Take that to the downside. But we could just push right through this. Morning, Honey Roy. We're right now in that macro. ES is bullish. Just closed above that. This could, let's see what happens here. I was not interested. I'm not interested because we closed above this. That's bullish. That tells me now I'm not going to take this breaker unless we close below this fair value gap. So our 50% retracement. I say I really like this right here. This is the 8:30 news candle. I would love to come up and tag. Oops. I would love to come up and tag that level. If we're going to tag that level, we're probably reaching into this fair value gap here. I mean, it looks like price could push up a little bit higher. That's okay. I'm not interested in trying to go long. It's just, especially when there's multiple fair value gaps. So you have this fair value gap right here, and then another fair value gap right here. For an inversion model, when it breaks above it, I don't want another fair value gap before a swing high. So see how there's a swing high right here? I would have I would want only one fair value gap before you hit a swing high. That would have made this an entry that I would have considered. But because there's another fair value gap, I'm not as interested. Now, could it still work? Yeah. I mean, it's just not as probable. And I'm not willing to take it. But we are hitting this breaker right here. And we're almost to the 50%. Am I going to go short right there? No. I mean, that's just too strong of a bullish candle. I need to wait for price to calm down right here and then turn around. Okay, there's 50% right there. We just tagged. Let's see how we respond. And we hit the midnight open. I really like that. I really like that. I do. Especially since we have the midnight open there as well. All right, I'm gonna go short here. I'm gonna wait till if it comes right closer back up to here. I'm gonna go short. I'm only doing 5 micros, like I said before.
Order filled.
We could push through here, but I have enough confluences that potentially could work. So we are at 55, so that means 65. It's gonna be my stop.
Order submitted.
If we get bullish really quick, I'll probably cut my profits right now, or cut it sooner than later. I want to see how we closed above it and we just started pushing. That's not what I like to see. If you're looking at this inversion, yeah, that is something to consider. I just don't like how we're in premium from where that's at. That's why I went short here, is because we were right next to premium. This could still work. This candle could just close down and it could show us that we're going to go down, but it is bullish. If we close above this fair value gap, that would be something, and you would target this high. And you would target that high. There's no reason for price to go any higher here. I'm gonna hate this, but I'm probably gonna get back in. See where this candle. But I'm waiting. It's probably just gonna go without me if it does go. Let's see, what do we got here? We got to be honest, what got me was 10 o'clock. Usually you get some volatility right on the top of the hours. And so this was 10 o'clock into 10:01. There it goes. Let's see if we close above this fair value gap. I'm going to go short here.
Order filled.
The only thing I don't like is we're right at, might have been a little quick on that, but we got this high right here. We could tag, but I really want to see it just pull down. If I don't get this one, I got my bias wrong for the day, guys, and I'm gonna be out. I'm gonna be done for the day. And let's see, we're right at my stop loss. I want to see it hit there and retrace. If it doesn't, I'm out. Okay, it's not. Nope, I'm out.
Order filled.
That's gonna be my day, guys. I got my bias wrong. That's gonna be my bias. Makes me angry, disappointing, but that's part of the game. This candle right here is what got me. We closed back into that. Well, there's stopping at the breaker right there. You see how that stopped right there? Just, I could have my bias completely wrong, so it happens. I just got to follow the rules. It's probably now going to go without me. Yeah, it's going to go. That's what I was looking for. Yeah, look at that right there, guys. I mean, I just wanted it too much right there. Look at the respecting of that. That's my signature and price. That's the signature and price I was looking for. Get rid of some of these lines that I'm pulling for you guys. It's kind of... That would have been that's a model right there. You can target this low. Those equal lows right there. All right, hits. Equal low were just these two candles right here. They're equal with each other, and you'll see price just wick right below it many times. So when you break below this, obviously I didn't take it because I'm out of trades and just too emotionally involved on my two losses. So, but when you close below it here, this inversion, you target unequal low, and then you either take half off, close your trade, or move your stop to break even. Now we're pushing back. See what I'm talking about, guys? It's like I have the right idea. I had the right concept that I wanted to look for. I just had the wrong timing and I was looking at the wrong piece. And so now as a day trader, your job is to identify why were your losses there? Why did you take them where you took them? And were they willing? This was me. What was this? Yeah, that was I was playing yesterday. So when you're looking here, so let's get this high right there. So when we take this here, that works. Why didn't these work here? We looked at this, which was right around the 50%, and then I took this one, which was within this larger fair value gap. And ultimately, your job as doing analysis is to figure out why did it go here. And it's obvious. It's clearly the better option compared to this one here. And I took this one, same in regards to this breaker right here. This breaker, looking back on my trade idea, was not the high that made the highest high. This is really what I would have liked to see, was this one. And we actually wicked up into this bottom, or the close of this candle we touched right there. And that is the one that made the higher high. So my blunder was thinking that we were going to be much heavier, that we were going to move too quickly. I miscalculated that, hey, we are in a larger time frame market maker sell model, and it could take some time, and I should have waited and been more patient. Wait for something that's clear like this. That's much clearer than what I was looking at down here. I was forcing an idea and wanted a specific idea to reach to work out, because I didn't want to miss a potential trade. And because I forced it, I got stopped out. It reached higher, hit the initial levels that I had on my charts. I had these on the charts, guys. Another one is right here, but I didn't take this one because that was market open. See that? Look at that right there. My job is to be able to identify these beforehand. And I probably still wouldn't have taken this one because we were at the open. And I just started and I just sat down and I just wasn't emotionally there. But if I had this marked out on the chart before, I may have considered it when we were bullish and closed below it, right into this breaker that made the high. And then we just dropped. This is why I like the breaker, man. It works. You just got to not be manipulated and distracted by other potential levels that you think stand out on the chart, and really stick to the fundamentals. And I didn't in my two trades. I didn't, and I'll be honest with that. I did not stick to the fundamentals. This should, based on just the price action here, we should run at least to this fair value gap. If we break through this fair value gap, we'll hit this low. So trade right there, that was the move. Oops, sorry. Or you could have done it at the higher one, the low that took the high right there. That made the high, that made the high, and that made the high. All of those are legitimate areas, and all of them worked out. I just should have waited until we were deeper into premium. There we go. We just tagged that fair value gap right here. Now that we tagged the fair value gap, that is enough to start sending price the other direction if it wants to go higher. How high? It depends on if we're bullish or bearish. We could come up to this fair value gap and then we could retrace again, or we could just hit this fair value gap right here and then continue lower. We are out of my time that I would prefer to take a trade. This one was right in it. 10:05. This was in the macro between 9:45 and 10:15. That would have worked out. Let's see, what was this one? This one was in my macro time. It was at 9:56. That's why, was it this one or this one? It was this one here. So it was 10 o'clock. So that was within my macro time. And that's probably why I was looking. I'm like, okay, well, I'm in my time. I only have 30 minutes. Where is price going to move to within this time that potentially could be the setup? It was here. See how it just tags it barely and then runs the other direction? It does that before it actually hits the swing. It hits the low. Now, it could hit it right away. It could wait. It depends if it's going to be, if we're going to have a running day. If we're going to make lower lows and higher highs. And nobody knows that. I would say I think it's going to be sooner than later because, well, we didn't grab liquidity here. We didn't grab liquidity here. We stopped here. I want to see it come up into this fair value gap here. This here is a mitigation block. High, low, lower, high. Mitigation. It's usually a place where you take off levels. It's not an entry strategy because they're not very, it's not a high probability. That's what happened yesterday and it dropped like a rock. Or was it? It's right here. It did it here yesterday too. High, low, lower, high, breaks lower, comes up into it, and then drops. Less probable than a breaker, but that's why I don't trade it, but it can work from time to time. So we're pushing through this. 2 minute closed above its fair value gap. 1 minute sitting right here. So if you're thinking of wanting to play an inverse on the 2 minute, I wouldn't until the 1 minute closes. Three minute looks good too. And because I'm bearish, I think we're going down. It's less probable in my book. Yeah, this is why I don't take longs right here. See how it's just hitting this fair value gap? I'm not interested in that. If you're joining us for the first time and you're wondering what's going on right now, we're just watching price action right now. Had a loss earlier, 2 losses earlier that just told me I need to be done for the day. But we're just reading price right now, seeing if we're going to continue higher or lower. We're right at equilibrium of this high and this low. So it's honestly, it's 50-50 at this point where price wants to move. We just needed to decide. Hey, Raul. I'll consider taking a short off of this candle. If we close below this on the 2 minute, needs to be on the 2 minute, and then I would target this low. I'm going to go down to 1 micro. Well, that's a bullish candle right there. So let's see how we close above here. "30 seconds. If we close above this, I'm like I said, I'm done, but I have 1 micro. I'll consider taking if we close above this. Stop loss would be moved to break even fairly quickly.
Order filled.
All right, 1 micro there. We're gonna put if we close below this box here, that's gonna be my out. Stop loss will be to break even
Order submitted.
once we hit this high right here. You could also take it off there. Like I say, guys, I'm only in a micro. I'm
Order submitted.
Can I grab a piece of paper? Can I please use a pen?
I'm on a call.
Oh. I'm gonna go distribute a bunch of flyers today.
All right, here we go. As soon as we get there, so I'm moving my stop to break even. Now that we've gotten there, I don't want it to retrace on me. I want it to hit this high, and ideally hit. Targets to break even. I have 10 points right there. And I want it to hit that. All right, it hit the high, stops to break even. You could target this swing high if you want. I have 10 handles that I'm targeting.
Order filled.
There it goes. And there it's probably going to run for the high.
Order canceled.
All right, that's the win. We'll call that a win for today. Call that a day for me as well. Again, like I said, it was 1 micro. Maybe it's less pressure. Who knows? Less money in front of other people. Let's see how price reacts here. I probably ain't gonna call it a day, so I'll probably finish tomorrow and follow through and do tomorrow as well for a live stream, and then I'm gonna evaluate, see how I like it. I'm more I'm more consistent when it's just me. So that I need to take that into consideration, because ultimately I want to be profitable. I live stream because I want to help people, but I want to be profitable. So I'm not a fan of the past 2 days. It's not a big deal. I've had losses before, but it feels different when you're in front of people, for sure. So definitely a new beast to conquer. But I'll finish up with another live stream tomorrow, and then I'll figure out what kind of cadence I want. Maybe twice a week. I'll do live streams, and then focus the other days on my own. Just focus on price action on my own. Continue my own education. So if you guys like videos like this, consider liking. I appreciate it. Looks like we are now being aggressive towards the high. Let's see how we react to this opening price. Sorry, this is what I do constantly. I want to see how price. It's extremely bullish. I expect it to just run right through it. That's what I would want to see. See that right there? It just blows right through it. So we're going to hit these highs. I mean, we hit this high, so we did satisfy a high, and this was the 930 open. More than likely we'll hit this, but alright, so we hit the high. That was the move. That was a nice inverse move. Obviously, I only target 10 handles, but that move would have been $42 handles. All right. Thanks for being here, guys. We'll see you tomorrow. Take care.